The RPG Groups Pramod Menon believes that India is witnessing cyclical issues and expects a rebound in growth soon. In fact, in an exclusive chat with my colleague Ajaya Sharma, the group CFO also shared his views on the current slowdown and the impact of the government's move to tackle the slump.
I strongly believe, let us say, India is the potential for growth in India is huge. It's a consumption-driven related economy. And India is a market, let us say, in which you keep supplying, there will always be, let us say, people to take it. And so if you look at the overall metric, I believe that in India, as far as the low capacity utilization is concerned, because we have been adding capacities, the growth has been coming through, growth has been there. However, let us say, as I mentioned, there has been this structural shift, and these are kind of cyclical issues, and we have seen the kind of growth coming through. So it's a matter of, let us say, a time before we see again the kind of rebound which is bound to happen. And what we are seeing is there are kind of qualitative measures which the government is taking the long-term kind of interest in mind.
So this the latest big booster shot of bringing corporate tax rates at par with global standard. How potent do you think it is now that dust has settled, and you must have worked your numbers at the group level and also other industries? How potent is it in your view?
I would say it's clearly a measure which will help India in terms of, let's say, getting back its growth. 2-3 very, very critical aspects as far as this particular tax measure has been that, on the fronts, on one side, they have said that you bring in, they have tried to boost the private sector investment by telling them, okay, you bring in new investments, 15%, however you have to complete the project by, let us say, 2023 kind of 2023 time limit, which means that any significant capex, you have to start, let us say, planning it today. Next 6 months, you have to start investing, let's say, start making advances payments, because a project will take about 18 to 24 months to complete, and you have to keep about, let's say, 6-8 months for contingency not to miss that timeline. So let us say, in my view, this is an excellent kind of step which the government has taken, that to infuse, or let us say, to make the corporate India to think about, and whoever was wanting to, let us say, sitting on those edges, they will definitely come in with those kind of investments. B is concerned, the overall, let us say, from a capital raising perspective, what we see is this will now suddenly, the paradigm has changed as far as the foreign investors are concerned, because for them the cost of equity and the returns has completely changed with a lower amount of, let us say, tax rate hurdle there. And suddenly again, India, in a sense, it always remained, and I think with the kind of current tax rates, it becomes, let us say, the destination to go in from a foreign capital perspective. So it has, let us say, addressed 2 or 3 issues. A, capital availability will not be an issue. B, in terms of, let us say, getting foreign capital and the foreign investors are concerned. And B is concerned, the corporates now can have a meaningful, if you create a right kind of structures, you can have 15% kind of a tax rate on fresh investments which are going through. And at the same time, let us say, they have also, the third thing is, with the reduction in the with the tax rates, what you will see is that immediately a lot of companies can go and correct their balance sheet. They will have that excess cash available in the system. And more importantly, over long term, that can be used for, let us say, capex related, because there are few companies who are good, who have hunger, but let us say the balance sheets are not in right shape today to pursue growth. So those are, let us say, and these are all long term, which will have yield benefits, but I would say there are steps in the right direction.
So for your group, being in infra by KC International, in C8 and Zensar, how does this change in taxation benefit, and how welcome was it for your group?
So I would say that overall, as a group is concerned, it's net been positive as far as the tax cut, which I would say would be the case in case of most companies, give or take. Certain companies which have, so were, let us say, entities in which we have got, let us say, high ETRs, and there were no, let us say, benefits or no carry forwards there, the benefits, underlying benefits are meaningfully substantial. And as far as certain other companies within the group is concerned, somebody can take, let's say, benefits in 2 years time frame, or let us say in 3 years time frame, depending upon what kind of existing benefits are there. But all in all, let us say, if I were to look at a longer term view, yes, there is substantial saving which will be there, and cash which will be there, which can be utilized or flowed back as far as investments are concerned.
So one quick word on CEAT, one of the biggest companies, and also representative of the auto industry. Auto is right now in the middle of a big shakeout globally, not only in India. because of disruption, etc. What are your thoughts? Do you think gradually it will tide over the kind of hiccups, the demand hiccups which we are witnessing, or there's a structural change in the growth rate for the industry?
I think as far as the auto sector is concerned, to a large extent it would have been created by the liquidity related, or let's say funding availability is concerned. And given, let us say, where the Indian economy is concerned and the demographic profile and the kind of infrastructure investments the government is doing, we still believe, let us say, as far as auto sector is concerned, there will be growth. And from our perspective, we are, let us say, clear about our investment related plans. And we believe that this overall the sector will do well.
It will come back.
Yes, over a bit of time.
And so what about KC International? It's become the largest company in your overall $4 billion portfolio. How's the visibility there? Infra is and last time we met Mr. Goenka, and he was also very enthused about, in the 45-minute chat, bulk of it was on KEC, which is doing very well. How is the overall visibility on the category it is operating in?
See, KEC has definitely got the tailwind of, let us say, the government-led infrastructure push. And we also happen to be in sectors like railways, and so that has given us definitely a great amount of boost. And what we are seeing currently is that post the elections, the tenders have started to come through, and let's say government has now started, let us say, the orders backlog has started to come in through. So order pipeline has been building up good, and we have been, let's say, diversifying ourselves into railways, into civil, into smart infra, and those kind of sectors also we are seeing strong orders coming through. And more importantly, I think a couple of these measures in terms of reduction in the interest cost, because essentially for an EPC company, the cost of debt is also a very critical element. And any interest rate reduction is something which is also aiding and helping the overall balance sheet. So overall, the company is in a reasonably good state with almost over 20,000 crore of order book, and well poised, I would presume.